Hello friends, my name is Amandeep Singh and I am a CPA at Cloudiverse CPAs. Today, I'm going to talk about 9 common tax mistakes which you might make when you file your taxes. Number 1, assuming that you don't need to bother filing a tax return just because you have no income. Make sure you don't compound your bad luck by not filing your tax return. This misunderstanding can cost you thousands of dollars in tax refunds and even criminal penalties. Number 2, underreporting cash revenue. Most small business owners are already on the CRA's radar for underreported cash revenue. And if your expense or revenue ratios do not match those that your tax officials expect to see, you might invite a detailed audit to identify additional specific details that might be incorrect. Number 3, not separating your business from your personal expenses. If you operate an unincorporated business, start a distinct bank account for your business and run your expenses through that account. This helps you visualize what's what when you're ready to file your taxes. This can also save you a raft of headaches while also monitoring the cash flow in your business. Number 4, claiming interest expenses incorrectly. Mainly, interest expenses can only be deducted if there is a direct link between the borrowed money and the present use of that money to gain or produce income from the property. Number 5, claiming home office expenses incorrectly. To be eligible to deduct home office expenses from your home-based business, you must meet one of the following criteria. Number 1, your home must be your principal place of business. Or, number 2, alternatively, you use a designated area in your home on a regular and ongoing basis to meet clients. Number 6, claiming vehicle expenses incorrectly. If you are deducting vehicle expenses from your business income, keep a log of where you're driving as well as your daily mileage. Driving from home to your office is not considered a business expense. One bonus tip here is to schedule client meetings on the way to and from work so that all of your mileage for that day would be considered for business use, thereby increasing business kilometers and saving taxes. Mistake number 7, not knowing whether the individuals who are working for you are independent contractors or employees of the company. If you assume your workforce is contracted and the Canada Revenue Agency decides that it is not, you could be liable for both yours and the employee's share of CPP and EI, and withholding taxes, of course. Moreover, you will be subject to the levy of penalties and interest on the under-remittance of those payments. The key here is to regard regulations and reporting requirements in your area to know when someone can be treated as an independent contractor and when they must be treated as an employee. Number 8, failing to have sufficient proof to write off business expenses. Now, if you're a business owner, the CRA will let you claim a host of reasonable business expenses which you can include to reduce your business income. Some of the common business expenses which the CRA allows you are business fees, membership or subscription, payroll and benefits, accounting, legal and other professional services costs, and telephone lines and utilities. These are some of the common ones. If you are like most small business owners, you might not like to spend your precious time to record business transactions as you might feel it distracts you from what makes you money, that is, your business. Record keeping doesn't have to consume your time. You can outsource your weakness, that is, you can outsource this function to your accountant and submit the expenses through cloud accounting smartphone apps such as QuickBooks Online and Receipt Bank. These apps make it easy to record expenses as they occur. Always remember that accurate records can help you prove your case to the Canada Revenue Agency. Mistake number 9, improper classification of capital versus expense items. The primary rule is whether or not the expenditure provides a lasting benefit to the business over many years. If the answer is yes, this points towards the classification as a capital expense. For example, purchase of furniture offers an advantage to the company over many years, hence the outflow of money is capitalized. Now, capital versus expense is one of the most critical distinctions in tax, one that can result in significant tax advantages if you can get it right. Finding the balance between capital and expense can be difficult, but the tax savings make it worthwhile to gain some knowledge on how to distinguish between these. Tax issues present an ever-changing, ongoing challenge to small businesses, particularly startups. They require consistent, complete attention and compliance. With proper tax planning, reporting, and paying your taxes on time, you can rest assured that your business will be in excellent shape in the event the tax authorities raise any questions. For more tips on managing your taxes efficiently, go ahead and click the subscribe button, and please give your comments on the bottom. Please visit our website www.cloudiverse.ca for more tax lectures and blogs. Thank you so much for listening to this video. Bye for now.